Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed at the previous VPOC at 2102, and then from there simply balanced within a range. Bigger picture, looking at the other markets, NQ tested support, TF is pretty much testing support right now, and the S&P is balanced and for the most part holding the recent range. So at this point, the buyers still have a shot at gaining control, but in order to do that, we would have to see a break above 2100 to 2102. In between that, the market is very balanced and it can really tip either way. So off the open, we just have to understand that right now the market is in a very balanced state, but bigger picture, the buyers have been dominant, the market has been quite resilient, but at this point, with TF being near balance area lows in its own market, either we're going to get a breakdown in the TF and that can trigger a sell-off in the S&P as well, or TF can hold here near its balance lows, attract responsive buyers, and that can lead to an upside move. But we're going to use the 2100, 2102 area to determine whether buyers are really stepping in. On the smaller time frames, if we're holding above 94.5 to 95.5, it would indicate that the buyers are being a bit more dominant. Below that, we have support 87.50 to 90.50, which is essentially the recent short-term balance area low and really the primary support at this point. Now, as we head down to 87.50, 90.50, if we're doing so on very negative momentum and negative internals and Russell is breaking lower and liquidating, then it would lower the odds of that zone at this point holding up because it has been tested multiple times. And below 87.5 to 90.5, the market can liquidate into 80 quarter to 82 quarter and 73.5 to 75.5. So the market is at an inflection point where either we're going to make a move up to the 10.5 to 12.5 resistance and fill the gap at 2112, or if we fail here and Russell starts cracking lower and NQ fails to hold, then that can result in a sell-off at least down to 80 quarter to 82 quarter and possibly 73 half to 75 half, and then that's a zone where buyers can still be active on first test. Now, because this market has been so resilient, we still want to be a bit more cautious on the short side and only really enter on the short side if there are very clear signs that the market is setting up for a breakdown. Because if you're shorting the market up here, you're not looking for simply a retest of 87.5 to 90.5. Shorts from these prices here or below 2100 to 2102 are really going to be looking for a short-term balance breakdown, and that's really only going to trigger if we see a lot of selling coming into the Russell, because that is the one that's been behaving a bit more weak in the recent few days. So I think the Russell can provide a good heads up on the direction of ES this morning, because Russell is at a very key inflection point. ES is very balanced, so we just have to be a bit careful on either direction, but still holding above 94.5 to 95.5 does tell us that on the smaller time frames, the buyers are being a bit more dominant, and balancing above 94.5 to 95.5 can eventually lead to a upside breakout, but the main inflection point in the short term is 2100 2102. If we break out above 2102, then I think we can get some acceleration to the upside and go up to 10 half to 12 half and possibly even 16 to 18 half. Now we can still get some rotation and profit taking at 10 half to 12 half, but at that point, the market does not have to stop at that zone, and we can eventually balance and head up to 16 to 18 half. So that's really the main idea on the day time frame. Looking at the econ calendar, we have Chicago PMI out at 8:45 a.m. Central Time, so the market can remain balanced for the first 15-20 minutes, and then we get some more directional movement. So that's really how the context is shaping up right now. Again, above 94 half to 95 half, it's still going to be better to be a bit more bullish rather than bearish. If we break 94 half to 95 half with any kind of conviction, that could be a heads up that we are going to go significantly lower, especially if the other markets are selling off as well. And then below 87 half to 90 half, it would be a short-term balance breakdown, and that can lead to liquidation down into 80 to 82 and 73.5 to 75.5. So those are our main thoughts. Let's see if the buy side can maintain control, and we'll take it from there.